Astera Labs ALAB Beginner's Guide. If you have ever wondered what physically holds an AI supercomputer together, the tiny chips and cables that let thousands of AI processors actually talk to each other, that is the business Astera Labs is in. They are a small fabless chip company that makes the plumbing for AI data centers, and they have grown faster than almost any other semiconductor company on the market. This is an educational walkthrough, not investment advice. We are going to focus on what the business does, not on the stock. So, what does ALAB actually do? Astera Labs sells 4 product lines, and all of them solve the same basic problem, moving data quickly between AI chips inside a giant server. The biggest product is called Aries. Aries is a PCIe retimer. PCIe is the standard wire that connects computer chips inside a server, and a retimer is a small chip that boosts the signal so the data does not get garbled when it travels a longer distance. About 47% of revenue, or roughly $400 million in fiscal 2025, came from Aries, and it grew 70% year over year. The second line is Taurus, smart Ethernet cable modules that link servers to each other across a data center. Taurus did about $200 million, around 24% of revenue, and it grew 4 times over, that is up 300%. The third and fastest growing line is Scorpio, which is a fabric switch. Think of a switch as a traffic cop that directs data between many chips at once. Scorpio passed 15% of revenue in its very first year. The fourth line is Leo, a CXL memory controller. CXL is a newer standard that lets AI chips share a big pool of memory instead of each having their own. Leo is still small, but Microsoft Azure has deployed it. The company describes itself as fabless, which just means it designs the chips but pays Taiwan Semiconductor, also known as TSMC, to actually manufacture them. Total revenue in fiscal 2025 was about $853 million, and the company runs a 76% gross margin with zero debt and about $1.18 billion in cash. So, who does ALAB compete with, and how does it win? Astera competes with 2 much larger chip companies, Broadcom and Marvell. Both of them sell connectivity chips into data centers and both are well-funded. What Astera has, for now, is a timing advantage on the newest version of PCIe, called Gen 6. Gen 6 doubles the bandwidth of the previous generation, and AI hyperscalers, the giant cloud companies like Amazon, Microsoft, and Google, needed to connect their next-generation AI accelerators. Astera is roughly 12 to 18 months ahead of Broadcom and Marvell on Gen 6 retimers and switches in high-volume production. That head start is what is driving the growth, but the report rates the moat as narrow, not wide, because Broadcom and Marvell will eventually catch up. The second piece of the moat is software. Astera has a layer called Cosmos. Think of it as the operating system that sits on top of their chips and lets each cloud customer customize the behavior without designing a new chip. Once a hyperscaler builds Cosmos into their server architecture, it takes months of work to rip it out and switch to a competitor. That is called a switching cost, the friction a customer faces when trying to change vendors. Amazon, in particular, signed a warrant deal worth $6.5 billion stretching out to 2033. A warrant is basically a long-term commitment with stock purchase rights attached, which shows how deeply Amazon and Astera are tied together. The flip side is concentration risk. Amazon alone is more than 70% of revenue, and the top 3 customers together are roughly 86%. What are the key drivers for the business over the past 5 years? 3 things have driven the operating profit since Astera went public. The first is PCIe Gen 6 leadership. Gen 6 is now more than 1/3 of revenue, and Astera is the only vendor shipping Gen 6 retimers and switches at high volume. Every next-generation AI chip, Amazon's Trainium, Google's TPU, and others, needs Gen 6 connectivity, so this single product cycle has carried Aries to 70% year-over-year growth. The company is already working on Gen 7 to extend the lead. The second driver is the Scorpio switch line. Fabric switches are a brand new business for Astera, and they sell at a higher average price than the smaller retimer chips. Scorpio creates what the industry calls an anchor socket. Once a hyperscaler picks Astera's switch as the centerpiece of an AI server rack, that switch pulls along Astera's other products like the retimers and the Taurus cables. The P-Series version of Scorpio launched in 2025, and the X-Series, with 320 lanes of bandwidth, was just announced. Scorpio is on track to become Astera's largest product line by the end of 2026. The third driver is the Cosmos software-defined architecture we mentioned earlier. Because every customer uses the same silicon but configures it through software, Astera can serve many cloud customers without designing a unique chip for each one. That keeps engineering costs down and helps explain why margins are so high. To wrap up, so at its core, Astera Labs is a fabless semiconductor company that designs the connectivity chips and cables that let AI processors inside a hyperscale data center talk to each other, and they got there first on the latest standard. A few things to keep an eye on as a learner: watch the rollout of the Scorpio X-Series switch and the broader scale-up market for AI servers. Watch when Broadcom and Marvell ship their own PCIe Gen 6 products, and watch how customer concentration evolves. Because Amazon is a very large share of revenue today. This has been an educational overview only, not investment advice. Do your own homework before forming any view on the company.